Good evening, friends. We will continue the previous session. In this, we are going to discuss about the scope of investment analysis. What exactly the scope of investment analysis? So here we are having seven categories, and we will discuss one by one in detail about these scopes. So first of all, we have to know what is the scope of investment analysis. It refers to the wide range of areas where investment evaluation is used to make effective financial decisions. It also helps individuals, companies, and government to analyze investment opportunities and allocate fund efficiently. So this is the definition of investment analysis. Coming to the seven categories, the first one, evaluation of investment opportunities. Investment analysis helps in identifying and evaluating different investment alternatives. So before we are going to invest the amount in a particular company or a project, you have to identify and evaluate different investment alternatives on a particular company or a project, such as stocks, bonds, mutual funds, real estate, business projects. So all these etc etc, you have to be uh, these are the major alternatives when you are going to invest the amount in a particular organization or a project, so that you have to choose the most profitable investment option, so that you should get the maximum profit when you are investing a amount. So second one, risk and return assessment. Investment analysis studies the relation between the risk and expected return. So you have to study about the risk and the return assessment. You should be ready for that, because when you are investing some amount, we don't know about the risk and return assessment. So it helps investors to understand market risk, credit risk, inflation risk, liquidity risk. So this allows investor to select investments according to their risk tolerances. So these are the few risks you have to be understand before going to invest the amount. Third one, portfolio management. It assists in creating and managing an investment portfolio by diversifying funds among different assets. So, portfolio management is nothing but not only to invest the amount in a particular company, it will be diversify the funds among different assets, like to reduce the overall risk, improve returns, balance investment performance. So these are the portfolio management. Coming to the capital budgeting decision, organizations use investment analysis to evaluate long-term projects. So mostly when you are investing the amount on a particular project or a particular organization, you have to think about the long-term projects, whether the project is a short term or a long term. So when the project is a long term, then you have to invest the amount on a particular project, such as plant expansion, new product development, or a machinery purchase. So for this, we are having different techniques. First one is net present value, internal rate of return, payback period. By using these three different techniques, we are going to calculate whether it is a long term project or a short term project. Coming to the financial planning, investment analysis helps individuals and businesses plan for future financial goals, such as retirement planning, education funding, business expansion. So we have to properly plan for future financial goals so that before investing the amount on a particular project or an organization, you have to think about these aspects. Coming to the economic and market analysis, here we have to study only the economic conditions, interest rate, inflation trends, market performance. This will help the investors to make better strategic decisions. So when you study about these four conditions, then you can able to analyze and you can take the strategical decisions. The last one, performance evaluation. In this case, investment analysis measures the performance of investments over time and help in monitoring returns, comparing alternative investment, adjusting strategies if need. So we are having the different performance evaluations so that we can get the profit maximum or not. So by monitoring and by comparing alternative investments, adjusting strategies if required. So this is the end of the scope of investment analysis.